What's up, everybody? Welcome back to the channel. Today we're going to be going over what market structure looks like and what the terms bullish versus bearish market looks like and what it basically means. So we'll start with the bullish market. Bullish, the term bullish in day trading means that price is going up, right? Price is going up in a pattern that is continuously increasing in price. So what this looks like is it consists of higher highs and higher lows. So right here, we have, imagine these are the candles. We have higher highs up here because what a higher high is, price ended up higher than the previous high. Now we also have higher lows, right, where price ended up higher than the previous low. So if we look here, this is the high on this specific area here. Now, the reason this is a higher high is because this high is higher than this one, right? Pretty self-explanatory. And same thing for these lows, right? A higher low is high, or this higher low is higher than this higher low over here, meaning that we're in a bullish market. Now, what this shows us is basically there's no market that continuously goes up in a straight pattern, right? These markets are going to go up in a kind of like a zigzag pattern, but we can identify whether or not they're going up bullish or bearish using this higher high or higher low strategy, you can call it, I guess. But what we see here is when price goes up here, comes back down here, what we would be looking for if we're going to be trading continuation is let's say a fair value gap. So imagine there's a fair value gap right here. Price tapped off this fair value gap and started going up, right? So that's just something we can use as how to trade continuations in a bullish market. Now, to start explaining a bearish market, a bearish market is when price is going down and it creates lower highs and lower lows, right? So let's put this down here. Now, a bearish market will start up here. We come down here. This is what a bearish market would look like. Something like this, right? We start up with having this lower high, right? The lower high, because this high is lower than the high up here. Then we've got this lower low, lower high, and so on, right? So as you can see, similar to the bullish market, this lower low right here is lower than the previous low that would be at, right? And this lower low right here is lower than this low, right? So from here to here, it's pretty self-explanatory. That just describes what a bearish market is and what a bullish market is and what these terms mean. Now, for example, if we're going to be trading continuations on a bearish market, we would use, so let's say, for something super simple like a fair value gap, we just see, let's say we have a fair value gap here, a bearish fair value gap, and prices in a bearish market created this bearish fair value gap, came back up into the fair value gap, and we decided to go lower. So that's just basic explanation on how we can trade continuations and what bullish versus bearish is. Now, let's go look at what this would look like on a real chart. So let's go right here. Right here, we've got a little bit of a consolidation, but also a little bit of a bullish. But this one here, okay, perfect. Price was dumping on Friday, so that's why it's extremely bearish. But up here, we got our high, right? So we got the initial high. Now, if we go down here, we've got lower low. And then here, lower high, because this high was lower than this high up here, which was also lower than this initial high, right? And now that high created a lower low because this low is lower, or this low is lower than this one, and then this low is lower than this one, right? So this is just your typical bearish market here that we can see, which was the entire day on Friday was fully bearish. But if we're gonna be looking at a bullish market, let's see. Let's just go right here. Right here we have our initial low, right? We've got the first higher high, and then we've got a higher low, and then a higher high, right? Here we see we have the initial low down here, the swing low here. Price came up, created a high, right? Came back down, created a higher low. So this low was higher than this initial low, creating a bullish market. So this entire trend here is called a bullish market, and opposite to that, this entire trend here is a bearish market. So I hope that helps. I hope that explains what a bullish versus bear market looks like. We can also, I'll make another video on what consolidation looks like, which is basically where price just goes in between a specific range. So it's just going up, down, up, down, up, down. Like for example, right here, just going up, down, right? That's just a basic example of what consolidation looks like. But I hope that helps. Good luck with your trading this week.